All right, welcome to this explainer. Today, we're going to act as your insider guide, bridging that gap between timeless stock market principles and the cutting-edge artificial intelligence that is completely democratizing Wall Street. We're pulling back the curtain on the exact AI tools you can start using today to literally level up your investing. Okay, let's dive into this. We're starting with a quote from Warren Buffett that perfectly sets the stage for our entire journey today. The stock market is a device for transferring money from the impatient to the patient. As we're about to see, the technology we use to invest is changing at lightning speed, but the psychological necessity of patience, well, that remains an absolute constant. Technology doesn't replace discipline, folks, it rewards it. Here is our roadmap for today. 1. The wealth building engine. 2. Strategies for modern markets. 3. The AI investing revolution. 4. Your personal AI stack. And 5. Mastering investors' psychology. Let's get right into it. Section 1. The wealth building engine, the mathematical power of the stock market. Okay, just think about the sheer mathematical power of compounding for a second. If you start with $10,000 and let it compound at a 10% annual return, which is roughly the historical average of the S&P 500, over 40 years, that initial investment turns into over $452,000. I mean, that's wild, right? The market is going to correct regularly, sure, but staying the course is exactly what unlocks this kind of extraordinary wealth. So, at its core, what are we actually buying to capture those returns? Well, shares. We need to step away from the blinking ticker symbols and remember that buying a share means acquiring a fractional ownership stake in a real, breathing business. If that business grows and makes money, it generates returns through capital appreciation and dividends, meaning your little piece becomes more valuable too. Moving on to Section 2, Strategies for Modern Markets, Building Your Playbook. To actually size up these businesses, we look at market capitalization, which is really simply the number of shares outstanding multiplied by the current stock price. Think of it as the total price tag of a company. To put that into perspective for you, large caps like Apple have market caps that actually eclipse the GDP of entire countries. Meanwhile, microcaps sit way down under the $300 million mark. Now, we really need to completely reframe how we view market crashes. A bear market is defined as a decline of 20% or more from a recent high. But listen carefully, bear markets are not disasters. They are perfectly normal, they are inevitable, and most importantly, they are incredible buying opportunities for long-term investors. They typically last around 9 to 18 months, and if you have the stomach to hold and even buy during these periods, you're positioning yourself for massive future gains. Another absolutely critical piece of the playbook is dividends. Not all companies pay them, but many established ones will distribute a portion of their profits right back to shareholders as regular cash payments. Reinvesting those cash payments back into the stock acts as an absolute turbocharger for long-term compounding. Over decades, reinvested dividends can literally double the total value of your portfolio. Let's build this all into an actionable strategy. For deploying capital efficiently, a simple 3-fund portfolio is just incredibly sensible. By allocating 60% to a total U.S. market ETF like VTI, 30% to an international ETF like VXUS, and 10% to a bond ETF like BND, you cover all your bases instantly. It gives you immediate global diversification without the massive headache of individual stock picking. All right, Section 3, the AI investing revolution, the great equalizer. Here is the turning point, folks. AI is fundamentally closing the gap between retail investors and Wall Street, and this brilliantly illustrates the shift. The rigid, old-school way was screening purely by the numbers, like looking for a price-to-earnings ratio below 15 and revenue growth above 10%. But now, we have AI semantic screening. You can literally ask an AI to find companies with similar business models to early Amazon in emerging markets. It understands context, business models, and narrative, completely bypassing those rigid metrics to give you ideas traditional screens would totally miss. AI is completely transforming the heavy lifting of investment research. Tasks that used to take entire teams of highly paid analysts days to complete can now be done instantly by an everyday person. Large language models can summarize 100-page 10K financial filings in seconds, instantly flagging buried risk factors. They can parse real-time global news, analyze the collective mood and sentiment on social media platforms, and even run complex mathematical models to optimize your portfolio's risk. It's a real game changer. Section 4. Your personal AI stack. Actionable tools for everyday investors. So how do you actually execute this?
Well, here are the exact word-for-word prompts you can plug right into general-purpose AI assistants like Claude or ChatGPT today. You can upload an annual report and say, summarize the key risks in this 10K filing. Ask it to compare the revenue growth of these three companies and identify the strongest. Or, honestly, my personal favorite, generate a bear case for this investment thesis. That one instantly stress tests your ideas like a pro. Beyond ChatGPT, there is an entire ecosystem of specialized AI tools out there. For beginners, Claude and Perplexity are absolutely amazing for document analysis and real-time news checking. At the intermediate level, a platform like Danafin provides AI-driven stock scores based on hundreds of daily data points, while Unusual Whales uses AI to track real-time options flow from insiders. And for the experts, tools like AlphaSense offer enterprise-grade deep document research, and QuantConnect allows you to build your own algorithmic trading bots. You can really scale your tech exactly to your comfort level.
Finally, Section 5, Mastering Investor Psychology, the ultimate variable, you. But here is the crucial twist. AI can crunch the data flawlessly, for sure, but it cannot fix the human mind. Take loss aversion. This is a well-documented bias where experiencing a loss hurts roughly twice as much as an equivalent gain feels good. It causes investors to systematically hold on to losing positions way too long, just hoping they'll bounce back, while quickly selling their winners just to lock in a temporary good feeling. It completely destroys wealth. Then we have recency bias. Our brains naturally overweight whatever just happened. If the market has been on a massive bull run for 2 years, recency bias tricks us into thinking it's just going to go up forever, leading us to buy in right at the peak. Conversely, during a crash, it tricks us into thinking the market is going to zero, causing us to panic sell right at the very bottom. And perhaps the most dangerous one of all is confirmation bias. That's our habit of actively seeking out articles and data that agree with what we already believe, while totally dismissing any evidence that proves us wrong. So the crucial point is, this is exactly why using AI is so powerful. As we saw a minute ago, assigning your AI to act as a devil's advocate and generate a bear case against your favorite stock, that is the absolute perfect antidote to confirmation bias. To actually defeat these psychological pitfalls, you need concrete, mechanical habits. First up, write down an investment policy statement so your rules are set before emotions start running high. Second, automate your investing using a strategy called dollar cost averaging, putting in a fixed amount every single month regardless of the market price. Third, set your exit rules before you ever enter a trade. And finally, keep an investment journal to honestly review your decisions. Removing human emotion through systematic rules is exactly how you win this game. Which leaves us with this final vital question. AI can process infinite data at lightning speed. But can you master your own mind? Building wealth today is really about pairing the limitless power of artificial intelligence with the quiet, steadfast discipline of human patience. Thank you so much for joining us for this explainer, and we'll see you next time.